Thank you for standing by, and welcome to the Limeade First Half Results Investor Presentation. All participants are in a listen-only mode. There will be a presentation followed by a question-and-answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. I would now like to hand the conference over to Mr. Henry Albrecht, CEO. Please go ahead.
Thank you, operator. Thank you all for joining. I'm Henry Albrecht, CEO of Limeade, here to present our results for the half year ended 30 June 2020. Joining me on the call this morning is Limeade CFO Toby Davis. Please note on slide 2 our important notice and disclaimer. Please note that certain statements in this document constitute forward-looking statements. Slide 3 presents the agenda. I'll give a quick Limeade business update and then walk through our assessment of COVID-19 and the future of work. Toby will then walk you through the first half 2020 financial results. We will then be happy to field questions. If we move to slide 4, and yes, I'm smiling right now, it's important to reiterate to our investors that despite the global pandemic and recession, Limeade customer retention remains strong, long-term demand has grown significantly, and Limeade continues to lead with innovation. Slide 5. Limeade's a leading provider of enterprise employee experience solutions designed to increase well-being, engagement, and inclusion, and lower employee turnover. The Limeade platform is used in over 100 countries with over 2.6 million users across a diverse range of industries. We built a strong, resilient, award-winning company and culture and have been recognized as an employee experience leader by companies like Forrester, as you can see. Our software as a service, or SaaS, is used by 175 of the best companies in the world, and our full year 2020 revenues are expected to be $56.1 million. As at our first half to 30 June 2020, 98% of our revenue base was recurring in nature. I'll now walk you through the Limeade response to COVID-19 and our insights into the future of work. Slide 7. We're in the midst of a global pandemic that has undermined the economies of the ES and the EU, our core markets. The US has been especially ineffective in managing the crisis, and the toll on emotional health, including anxiety and depression, has been high. As you can see in slide 8, the pandemic has revealed fundamental flaws in the way we work. The Gartner reports from June and July of this year have sought to articulate these changes. You can see the future of work and the employee experience were ranked number 1 and number 4 respectively for HR priorities into 2021. Gartner expects that in a post-COVID world there will be an increase in remote working, and the role of the employer will expand to acting as a social safety net for employee well-being. In other words, showing care. This is exactly what our platform has been designed to do. From a financial perspective, companies included in the Future of Work Global Index, of which Limeade is a member, have materially outperformed the NASDAQ and Dow Jones Industrial Index over the past 5 years, with the average forward enterprise value to sales multiple of 10.5x. In other words, the market has quickly realized the fundamental change to the workplace environment will materially benefit those companies who are uniquely positioned to capitalize on this structural change. Turning to slide 9, as we navigate through COVID-19, the Limeade point of view is resonating in the market, as we've seen a 6-fold increase in top-tier press coverage on the company in the first half versus the prior corresponding period. Well-regarded industry analyst Josh Bersin said, "Their entire focus is on care for individuals, managers, and teams, which is perhaps the number 1 issue companies face." Slide 10. The company continues to innovate ahead of the curve with the launch of new and timely features incorporated into the Limeade platform, whether they be features focused on employee listening, like our enhanced pulse surveys, in-the-moment well-being reminders, daily health check, or the ability to ask a question to a leader, a COVID-19 task force member, or your HR department in your organization. Reaching employees, things like our Care and Crisis Resource Center, the fact that we do everything mobile first, our Return to Work Guide, our Emergency Guide, and our Benefits Wallet, where you can see all of the resources, tools, and basically care-providing solutions your organization provides in one place, and employee resource group support. And then lastly, just recognition, making people feel a connection, a human connection to their organization, and that organization's values, connecting them to their purpose. All of this is innovation we've released in the first half of 2020. As we move on to slide 11, we strongly believe our platform is the best in the industry, having been designed to reach anyone, anywhere, with low-cost mobile technology. Only Limeade combines well-being, inclusion, and engagement with real-time communications to meet the demands of 2020 and the needs of a changing workforce. Our software has been built with flexibility in mind, with the ability to serve all of the different populations of the modern workplace. Slide 12. As you can see here, we're seeing strong customer validation of the value we deliver. As we have seen a very material increase in the size of our overall pipeline, and especially in the massive growth in indicators of longer-term demand, including webinar attendees and meetings booked. Our total pipeline as at 30 June 2020 is $219 million, up 61% on the September 2019 pipeline disclosed to the market in the Limeade IPO prospectus. Of the sales qualified pipeline, $18 million sits within the finalist and verbal stages, and $57 million in the develop and prove stages of our sales process. Our sales pipeline is defined as organizations who have the budget, the authority, the need, and the timing to make a purchase decision. Relating to the impact of COVID-19 on corporate priorities and budgetary decision-making, Limeade has experienced some slowdown in the progression through the later stages of the sales pipeline, with finalist and verbal pipeline down 5% versus 30 September 2020. However, develop and prove was up 12% over the same time frame. I'd now like to turn the call over to Limeade CFO, Toby Davis, who will go over the first half 2020 financial results in more detail.
Thank you, Henry. Slide 14 provides a snapshot of our financial highlights for the year. Total revenue was $28 million, which is up 24% versus the prior corresponding period. Subscription revenue, which represented 98% of our revenues for the period, were up 26%. Our gross margins grew to 77.1% versus 75.7% compared to the PCP. We have driven increases in operational efficiencies along with reducing the time it takes to launch new customers. Another key metric to emphasize is the average size of our well-being customer grew 6% versus the PCP to 641,000. Additionally, our overall average car per customer was up 13% versus the PCP to 323,000. This highlights our focus on delivering superior software for large global enterprises. Limeade recorded 7 new customer acquisitions in the first half 20. This was down from 10 customer acquisitions in the PCP due to COVID-19 contract delays, as previously described to the market. Despite the decrease, we're pleased to add new logos in the middle of a global pandemic. Limeade expects to increase the signing of new customer contracts in the second half of the year. Most of these customers will launch the following year, which is consistent with prior periods. The total number of Limeade customers was 175 as at 30 June, up from 173 customers as at fiscal year 19. Net revenue retention, or NRR, was 98%, down 4% from the PCP and down 1% from fiscal year 19. We continue to closely monitor and provide support to our customers amidst the uncertainty of COVID-19. Slide 15, our revenue growth over the history of the company has been consistent. This growth half over half is a reflection of our SaaS revenue model and customer contract commitments. Our customers typically sign a 3-year contract and pay on an annual subscription fee in advance. Importantly, the average length of a customer relationship with Limeade is over 7 years. Our new customer launch times are reasonably modest, with an average implementation of approximately 90 days. We continue to maintain a diverse customer base by industry, with no one industry representing greater than 23% of revenue. Our top 5 customers make up 24% of first half 20 total revenue and span 5 different industries. Overall, this minimizes our sector concentration risk. Slide 16 provides a summary of the pro forma income statement for the first half 20 results. We've already discussed the growth in revenues for the first half, so I'll focus on our operating expenses and EBITDA loss position. Total operating expenses increased 19% compared to PCP. The main reason for this is the increase in headcount, starting from 230 at first half 19 and ending at 275 at first half 20. Limeade saw a 58% improvement in EBITDA loss compared to PCP due to increases in revenue and improvements in operational and marketing efficiencies. As investors will recall, we upgraded our full year expectations for EBITDA loss and net loss for the company versus our prospectus forecast at the June quarterly. Our R&D expenses increased 17.6% on the PCP to $8.6 million due to the increased efforts and enhancements to the platform as previously mentioned by Henry. Limeade increased its investments in sales and marketing, albeit more modestly than forecasted in the company's prospectus due to COVID-19 uncertainty. Our market opportunity is still significant, and software will continue to make up a higher proportion of the employee experience market over time. As Henry mentioned before, companies are realizing the need to care for their employees, and they require tools to support these fundamental efforts. Limeade is uniquely positioned for the cultural revolution, and we are seeing signs of increased interest as evidenced by the increase in our pipeline opportunities. Moving to slide 17, our operating cash outflow for the year was modest at $500,000 and flat versus the PCP. This is due to the improvements in our EBITDA performance, which was offset by timing difference in working capital. We also capitalized $1.5 million in development costs during the half, reflecting the new initiatives developed from our R&D teams. Free cash flow slightly improved by 8% from $2.4 million in first half 19 to $2.2 million in the first half 20. As a result of COVID-19 uncertainty that occurred in the first half 20, we were deliberate in our approach to minimize cash burn while also maintaining our strategic growth execution. Moving on to the balance sheet, we maintain a conservative balance sheet with $28.4 million in cash and no debt as at 30 June. There's been a 45% increase in our deferred revenue, and this is due to the increase in customers signed in fiscal 19 and billed in late 2019 and early first half 20. Turning to slide 19, as previously mentioned, our headcount grew to 275 employees during the first half, up from 230 in the PCP. Our continued investments in R&D drive the Limeade platform innovations and infrastructure to enable future solutions and additional features. Our investments in sales and marketing teams also drive pipeline growth and new geographic market expansion. We also grew our customer success and customer operations to support our increasing customer base while implementing new initiatives to deliver best-in-class service at scale. We also increased our G&A teams due to the managing requirements of a publicly listed growth company, along with expanding our global operations. I'd now like to turn the call back over to Henry, who will update you on the Limeade outlook.
Thanks, Toby. As I mentioned at the conclusion of the second quarter, I'm thrilled with the resilience of our people and our business despite COVID-19 impacting our core North American market and the broader world economy. We've always run our business with financial discipline. COVID-19 has created some uncertainty in the near term. However, we maintain strong customer relationships, and our business is highly adaptable and flexible on costs. We're pleased to reaffirm our prospectus revenue forecast of $56.1 million, and per the ASX release on 31 July, have maintained our guidance of a significantly improved EBITDA loss for the full year between $5.5 to $6.5 million and a net loss after tax of $7 to $8 million. The revised guidance provided on 31 July and reaffirmed today is a result of savings due to a reduction in COVID-19 related travel expenses, transitioning to fully virtual marketing and customer events, and moderation of hiring plans. We're poised for the future. That concludes the formal presentation. I will now hand over to the operator for the question and answer session.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. Your first question comes from Tim Lawson with Macquarie. Please go ahead.
Hi, Henry and Toby. Thanks for taking my questions. Can you expand on the comments on headcount? I mean, I appreciate you called out, G&A, R&D, sales and marketing, but just where the increases have come from and whether any of the sort of COVID impacts have had an impact on your ability, particularly in the sales and marketing side, and what that you obviously reconfirmed your guidance. That's good, but just thinking how that's affecting the business in the sort of outlook.
Yeah, Tim, thanks for the question. Nice to hear from you again. I'd say, our headcount growth has been consistent with our expectations. I'd say, we've just pulled back a little bit on some key hires that were expected in the forecast, which was why our EBITDA position, came down last July. But where we've really focused our increases we're still in the sales and marketing side of the house to continue our global expansion and our pipeline increases. I'd say, some of the roles that we've looked at is more G&A and just kind of the work from home repositioning of the company. We just made some decisions on certain roles that just weren't necessary under that environment.
Yeah, okay.
Yeah, Tim, if I were to add anything, I would just say it's been a super interesting challenge to not do a lot of the ways we used to do marketing, in-person events, customer events, real relationship building. I've been very pleasantly surprised with the execution of the marketing team and the ability to generate meetings, leads, opportunities, and Salesforce pipeline without seeing people face to face. So I think my guess is that much of that innovation will be enduring into the future because it seems to be working reasonably well. So we're not really cutting back in some of the core demand generation elements of the business.
Yep. And just my second question is in relate to with the pipeline. I mean, you obviously see you've called out the sort of two finalists, the verbal and develop and prove type areas. Smaller movements, but quite a material movement in the qualified. Obviously, a bit more perspective, but just to sort of get some colour around the driver of that increase would be really helpful.
Yeah, I don't normally like to talk too much about things that are longer term in nature, but we've experienced a material change in every element that would be an early indicator that the future of work is changing and that technology is needed to help it. That shows up in huge increases in media coverage, in webinar attendance. You saw up over 300%. People are paying attention to issues that Limeade's been talking about for over a decade, reaching a hard-to-reach workforce, emotional health, mental health, staying connected with remote teams, infusing the values of your organization throughout a remote workforce. These are problems we've been working on for a decade that the market immediately woke up to in light of COVID. And I think all the analysts, thought leaders, and press are catching up onto this, as are the enterprise buyers that they influence. So I think it really has a lot to do with COVID. We've used the metaphor, 1 foot on the gas, 1 foot on the brakes. There are some, as mentioned, some questions about, at what time will budgets release fully the way that we expected them to be. On the other hand, there's really no question for us about the if of that. The foot is on the gas in the long-term demand.
Yeah. So what's the typical sort of sales cycle for conversion rates from a qualified and how long it takes? If there is a typical, by the way.
Yeah, I mean, I would say everything is atypical in 2020, but our historical average has been a kind of a roughly year-long sales cycle. So 10 to 12 months is typical for a deal we would size in the $500,000 range. If they're much bigger, it can be longer. If they're smaller, it can be shorter typically. But I would say with that, we've also seen both delays but also urgency. Companies coming to us saying, wow, this is a problem we need to spend money on, and Limeade is a vital part of what we need to do for our people right now. So it's been highly varied, Tim.
And the typical sort of conversion, if there is one, from something within qualified?
Yeah, I don't think we're prepared to share all the stage-by-stage conversion rates on this call.
Yeah, that's right. I'll try for one more question around some detail. I think at the half year you gave us enough information around sort of upsell and churn and et cetera on sort of average car that we could sort of work out that the churn customers were pretty small and you were winning much larger customers. I'm not sure you've given us sufficient information this time to make those same calculations. So just trying to understand of the customers, you know, obviously there is a bit of churn, but how big they are, and again on the other side, the sort of size of customers that you're winning.
Yeah, Tim, I can take that. I think on the churn side, the 98% NRR, you're correct. There's gross churn in there, and I'd say, you know, that was a very small piece of the 2% that's down. You know, that's the contributing factor. We had minimal upsell opportunities that we closed in the first half, just due to some of the impacts of COVID-19, and part of our closing of additional business, not only new but also expansion, we expect to come in the second half. So that 2% is really the gross churn.
Right. Okay. Thank you.
Your next question comes from Brendan Kelly with Moelis. Please go ahead.
Hi guys, thanks for taking my question. Just on the pipeline, and going back to some of your comments from earlier calls, just around some contracts getting far more advanced within the second quarter. Just wondering if you can just give us some insight into how the conversion's been in July and August, just given that you are in the early stages of your key selling window.
I don't think we'll provide that detail on this call. I will say it's nice to see some unfreezing of activity. I think there was a time, to be frank, in March and April, and maybe even into May as well, where the reaction of the enterprise buyer wasn't so much about, you know, whether we win or not or how quickly we convert in the contracting process. It was literally whether we could even get someone on the phone who had meetings scheduled with us. So it was a very stark shutdown in March, April, and much of May. And we're really seeing that unloosen. We're seeing those meetings get rescheduled and set back up, and we're seeing movement through the pipeline, but we're not prepared to speak on specific material deals from July or August. Toby?
Yeah. Hey, Brendan, it's Toby. Nice to hear from you again. I'll just, without getting into specifics, kind of to Henry's point, what I'd just say is we've got more customers that we're verbal with right now that we're contracting than we did close of customers in the first half of 20.
Okay, cool. And so just in terms of the timing on verbal, look, like I understand that sometimes it's out of your control, but should we be expecting new wellbeing contracts in Q3, or do you think it's probably more of a Q4 type dynamic?
Yeah. In a certain period, you know, in a historical period, our contracting can last a couple months. I'd say this is probably not a typical, obviously, time of the world, but you know, these customers are verbal. We're in deep stage negotiations, and we expect to close a few of these deals, and you know, we'll release that at the 4C period.
Okay, cool. And then just if we could just get a sense of where car is, because it's a pretty important forward-looking metric for the company. Understand there's been a bit of inertia in the market for the first half, but could you just give us a sense for how that's tracked?
Yeah, as much as we'd love to share that, I think we've taken a position that, you know, due to the uncertainty of COVID and the period of where we're at, we'll share that number on an annual basis.
Okay, thanks for that.
Once again, if you wish to ask a question, please press *1 on your telephone and wait for your name to be announced. There are no further questions at this time. I'll now hand back to Mr. Albrecht for closing remarks.
Thank you, operator, and thanks, Toby, as well. Thanks, Tim and Brendan, for the great questions. Just looking forward to the second half of the year. This concludes our formal presentation, and thank you very much, operator.